Greetings all, Ben here from East West. We're going to take a look at uranium, and oh boy, I'm not on Twitter with this handle anymore because I just found that uranium Twitter was just a bit of a cesspool. But if you are on uranium Twitter, you're probably seeing a lot of this, a lot of inspirational memes. Utterly ridiculous if you ask me. That's just people not really dealing with the reality of what's unfolding. Not all doom and gloom, of course, but you can't just hoot and holler every time it goes up and just completely ignore it every time it goes down. And we are now experiencing a bit more of a major downturn. Now, just let this episode be somewhat of a warning to you, in so much as, you know, I've always sort of banged on about the importance of having a plan so that you know what you're going to do before time if the market doesn't go the way that you want it to go. Now, I would be pretty sure that a lot of people don't have a plan, and now they're wondering what should they do. Well, it's up to you what you do, but you know, I'll say it again. What is your plan? Like, where was your exit? What was the point in the market where you thought, oh, I don't like this anymore, I'm going to get out and just wait and see? You know, that just a plan. A plan is expect the best, but prepare for the worst. That in terms of trading, and even investing, that's just what I'd be looking at. So, with all that being said, not everything's doom and gloom, but let's just take a look at the markets. We'll take a look at a few different stocks here, and we'll just try to unravel it and see where we sit. Now, just flicking through some of the news, I just look at these. I mean, look, this is for a bar chart. Look, I wouldn't take it with a grain of salt. I'd probably take it with a ton of salt because I've got no idea whoever this person who did this. I don't know who this person is. I don't know if they're any good. Don't know if they're not any good. But I thought I'd just take a look at some of these because it's interesting. So CCJ obviously is leading things. And then, of course, Energy, URG. That's something we haven't really looked at, but we might just take a look at that to see what it's doing. And then Energy Fuels is something that's been pretty much on the back burner for me. So, I don't know. Analysts are feeling pretty bullish about Energy Fuels with a strong buy. Well, how's that going for you? It's probably not ideal, right? Anyone who's holding Energy Fuels is probably shaking their fists at the screen at that sort of thing. But we'll take a look because I think they might be starting to move into some interesting spots. So it's something that might put them back onto the radar. Maybe not necessarily charging to buy them, but start to observe what's happening in them. So let's just go and start with CCJ. Okay, so over the last couple of weeks, we've been observing the break of this 20, or what I would call the 2023 trend. Okay. It's now broken. Now, there's probably a hell of a lot of people thinking, the bottom's coming anytime soon and we're about to charge up. And maybe that's right, but I'm not seeing any evidence that that's about to happen. So I think that's, at this stage, that's just wishful thinking until we start to see some sort of concrete evidence that the market's starting to hold its feet or find its feet and hold its levels. And right now it's not. I think just praying for another rally is a bit foolish. Okay, as we close out this week, I mean, there just isn't. There's been no relief from the sell-off from the high. Okay, we've fallen pretty far and we've fallen pretty fast. Okay, now at this point in time, I don't want to be like a negative Nelly and start being a Chicken Little saying that the sky's falling in. But let's go back in history and just take a look at if this is a warning sign that it is all over, which I don't think it is. But I think we just go back in history and we just check it out, right? We need to just be mindful of what's happened in the past so we don't get stung by the same sort of thing in the future. Now, let's just go back here to, this is the big bull run that topped out in 2007. And now what I'd just be wary of, okay, very wary of, is this sort of thing happening again. Okay, I'm not saying that is what's going to happen. I'm not predicting that's what's going to happen, but we've just got to be aware that the market doesn't face some sort of big plummeting action like that. Now, on the big picture, like, you can say, oh yeah, it's not much of a pullback, but let's just analyze it and have a look. Now, here's what this means, right? This market lost nearly 40% of its rally, okay, and this is a rally that started in 2002 and went all the way to 2007. It lost nearly 40%. You can see there, this is just the increments down, nearly 40% of its value in less than 5% of the time it took to rally. That's how quickly that came off. Okay, now we did get this bounce back, but we know, look what's happened, okay, afterwards. Now, I'm not saying that's what's going to happen, okay? I'm just saying, when we look back, this is how quickly things can, this is why it's important to have a plan in place, because things can unfold that quickly. And for reasons that you don't understand, you can't explain, but it just happens, right? Maybe there is no catalyst. Maybe there is a catalyst that's yet to be seen. But, yeah, look how quickly that unfolded. Now, if the same thing was going to happen, and I'm definitely not saying it's going to, I'm not predicting that it's going to, I'm just saying if. You've got to consider this. If the same thing was going to happen, you know, you could be looking at CCJ back to, you know, towards that $30 mark, which is kind of what we've discussed before. But to do it that quickly, I mean, within 6 weeks, if CCJ is trading at you know, at $30, I mean, how are you going to feel about that? It was $51, you know, 3 or 4 weeks ago, and all of a sudden it's dropped nearly half its value. It's given up nearly 40% of the rally that we saw from the COVID low. If it gives that up in 6 weeks, I mean, what are you going to do if it gets here? I mean, are you still in? Are you bailing out? I mean, this is why you've got to have a plan that happens while the market's rallying, not start to get when it's coming off like this and starting to think, oh, well, now I'm going to make the plan. You needed to have the plan as we were coming up, okay? Where are the points where we're going to get out? Now, this is why it's important to, just because you don't like someone saying that it's not going up anymore, you still got to listen to it, and just you got to sort of remove your own bias, because look, I've said a few times that, you know, I said in my end of year review that I thought the market was in danger of a major correction coming into 2024. Now, I don't know if I'd call this a major correction yet, but it's not a bad start to a good correction. It doesn't feel very good, but most people, I was getting comments saying that's too bearish, it's going to double. I don't know. Like, if that's your view, that's fine. I'm not trying to change your view. I'm just reading the charts as it was telling me. I pointed out a few times that as we started getting up to these highs, that there was starting to become signs that this was starting to run out of gas. Now, it's still early in the piece in terms of if this is going to be a major correction. But I think I sort of said, well, this pivot is now important, and we've held it, but now we've broken it. Okay, so I don't know. I guess if it was me, I'd probably be out of this stock by now. I mean, someone asked me, you know, if this, you know, I think this was the bad news, the bad earnings, if this was enough to make me get out, and I sort of said, well, maybe not get out right away, not today, but I'd certainly have a plan in place if it doesn't hold, and my plan would have been probably somewhere around this pivot. Now, the fact that we got below it, I'd be starting to get nervous, but, you know, at this point, I would be out. I would be out. And what would make me get back in? Well, I'd need to see, probably, at the very least, I would need to see a trend change like this. I would need to see that at the very least. And I would probably need to see, rather than just one swing, I would probably need to see more swings that get back above this peak. Okay, we're a long way from doing that. So at the moment, I would be out. That's just me. I mean, I would be out and thinking about, okay, now that I'm out, what plans do I put in place to get back in if it starts to go back up, because we're sort of expecting that this will find its feet eventually, and that it'll go on, okay, and it'll make higher highs as, you know, some of the issues that we've got right now sort of rectify, and production can get going, and you know that those sort of overall structural deficits start to exert their influence. But right now, no. Now, I haven't looked at the Elliott case here for a while, but I'd kind of look at it like there's a few different scenarios that I would look at, and I would kind of look at it like this. I think there's always a few ways you can dice this. You could make this an impulse with a triangle 4, not a great impulse, certainly possible, but I would probably look at this rather than this being the end of it, and that, you know, for the next 10 years we're going to get a repeat of just nothingness. I don't think that's what's going to happen, but now I would sort of think, just on the textbook, I would be thinking, okay, well, now we're looking at, now we're looking at the B wave. So if we're going to get, and this will tie back into what I was saying about, you know, what type of corrections could we expect? Like, we could get a very sharp B wave like this. I still think less likely. And we could get more a classic sort of B wave zigzag like this. Not impossible. It's still early to tell, but this is certainly once again possible. Or we could get something sort of, what I'm kind of anticipating is something a bit flatter like this, which could take the form of a triangle like that, or it could just go into I'm still sort of thinking major trading range, but we haven't found that wherever this short-term bottom is going to be yet. So, you know, like the B could be somewhere coming in very short. Maybe it's this. Maybe we're just going to sort of, we've probed below this, 42. Maybe we're just going to probe down into the mid-30s, and then we're going to start to find our range. We'll take some time to digest, and then we'll go up and get higher. I'm not saying that $92 is where it's going. That's just, you know, the anticipation in the future. That could be here. It could be further off the chart. It could be anywhere, right? I'm not trying to. I'm more worried about just what's happening here, and then thinking, okay, we'll get another rally that goes somewhere. I'm not predicting where. I'm just somewhere higher. So that's kind of one way to look at it. And then the other way I'd look at it, it's much the same connotation, but I just think the other way you could look at it is that this was 3. I think this probably fits better, that this was 3 waves, not 5. And then we'll get, so that would make a wave higher of a larger degree like this. And then we would get, you know, either that sharp or that flat sort of X wave before we go up and get another 3-wave pattern to finish. Okay, but that, you know, it could be into 2026. I don't know. I'm not trying to predict that. So I'd say what I'm saying is the Elliott connotations look the same. Okay, but we, you know, I've warned for a while, and I'm not the only one. There'd be plenty of people who aren't liked because they don't just toe the company line on bullish forever. I've been warning that this sort of thing could happen. Okay, so now it just becomes seeing how this unfolds. Okay, but like I said, in terms of a plan, well, I would have been out through here, so I'm out of the market now. Could this turn around and just go like that? Absolutely, it could. And would I have egg on my face? Well, the permables would say I would, but no, I don't, because I've managed my risk and, you know, read the market as it's unfolded. And for me, this was the point where my plan would have been get out of the market. Now, if it did this, I would like to think that I would have got back in, because it would have shown signs of a bottom. We would have started consolidating, going higher. And, you know, maybe at this point I'm going, okay, I'm ready to get back in. Now, I've given up, you know, maybe when this broke here. So maybe I've given up that profit, but that's the insurance I've paid to stay safe from the more major meltdown. And if it does get down there, well, I've got some extra cash to go back in. Anyway, I don't want to go on about trading semantics, but, you know, that would be how that's how I'd read it, just as it sits. Anyway, enough rambling about CCJ. I do want to look at energy fuels, because this one has been off the back burner, but I think it's starting to get a bit more interesting now. Like, the first thing I'd look at this is, okay, we've sort of blown through all the main retracements. It held once, but, you know, it's given up and it's gone down even further. So I don't know, like all those strong buy sort of broker stuff, how's that working out? But just looking at this now, I'm thinking, okay, well, is this starting to show signs that it might be getting ready to put in a bottom? So the first thing I'm just looking at here is just, these are just Keltner channels, but the fact that the market, through this whole downturn, we're just starting to get some bars that are just getting outside this Keltner channel. Now, we don't have any free bars, which would be bars that are completely outside the channel. But once we start seeing that, and we're getting pretty close to it, then that's when I would consider this move to be parabolic. I mean, it's parabolic down, but it's. I would think my anticipation is that this is coming into maximum. These were free bars above. My thought would be that this was coming into maximum downdraft. That the momentum is at its maximum for the way down. That would just put it on the radar. So then I'd just be going to these indicators. The RSI is like low, 15. So some people say, oh, well, it's oversold. That means... no, it just means that when you go back over the last 14 bars... 14, right? It just means that from this bar, you can see very clearly that the down candles have got way more power than any of these up candles. And we're just taking the average... the magnitude of the down candles versus the magnitude of the up candles, and that's why the indicator is so low, because it's all down candles, so that, you know, the sellers are obviously in control. But now that we've gotten outside this nicely contained downtrend channel as well, it starts to just come onto my radar. Okay, so what do we look for? I mean, we do have some levels down here that we're approaching. There was a pivot here, but you would just sort of be thinking, okay, well, let's just take a look at this. Sort of down here a little bit further, and I'm not saying that you would leave a bid there necessarily, because yes, you could, but it could also go straight through you. But that's up to you to how you're going to manage your risk. And then beyond that, of course, we would have these areas, but you can see how this all goes together. So if we start getting a parabolic move down, and the market starts getting into this zone, and then this starts to just turn back up, like you see, and maybe the volume starts to increase a little. I mean, we've got some earnings coming up here. A little bit of time yet, but things just start to turn around. It just starts to find its feet. Now we're on the daily here, mate. Even going to a weekly, we've come down pretty quick. I mean, we're sort of down here at 30 now in the RSI, but we've just closed outside that weekly cloud now, so we've lost that, which isn't a great sign. But I think just what that means is that you can see here also that I think we're going to get the Kumo twist, but this flat cloud bottom is definitely going to provide some resistance around here, just at $7. But just what I'm saying is, just as it starts to come into this zone, that after all this price action, that it might be time to start watching, not necessarily jumping in and buying, but starting to watch for signs that the market is starting to bottom out, maybe starting to go into a bit of accumulation. We're not there yet, but it's on my radar. I think this one's interesting now. It's really had a lot of beat down, and I'm not saying that it can't go even further, but I just put it on my watch list just to see how it unfolds. But I'd understand a lot of people didn't want to do it because, yeah, it's been a dog with fleas. It's been a very difficult one. It's not been correlating very well to what's happening in the rest of the uranium space. And a lot of people will point to, the rare earth components, but go back and do a correlation on that, and all of a sudden the rare earth component, it's actually interesting. If you go back and have a look at the correlations of energy fuels to, say, the Spot Uranium Trust and the VanEck rare earth miners, it's still correlating harder to the uranium trust than it is to the rare earth. And I digress, but I think the main thing here is that this is starting to become a stock of interest. Okay, this could be a good value pickup, but time will tell. We'll wait and see. Now, URG, obviously, it's a smaller stock here. But I think the same things apply. It actually hasn't lost its trend just yet, but we are still, I imagine it's going to. But this is a very straight rip down. We haven't got parabolic. We haven't got outside those Keltner channels yet. So, like I said, I'd be watching, and we can see pretty clearly that we've got, well, this was a bit of a level just above the 50, but you would think that this could maybe hold around this 50 mark, but we're not there yet, so we've got to wait and see. Like I said, I'd like to see a free bar outside the Keltner, and that coming into maybe some accumulation, which we don't have yet. And this, I mean, this is, you can see how super low this is, because if you look at the last 14 days, there's only been about 3 up days. The rest of it's all just down, down, down. So naturally, that's going to be low. I'm going to switch this to the weekly. This is classic divergence, right? That this market here, we made a higher low, okay, at the top. So, you know, I'd also just be looking for that sort of thing coming back the other way. Okay, it's not there, but I'm more interested now in thinking about where's this going to be a buy than where am I going to unload it, because you know, it was telling us pretty clearly here that there was an issue on this RSI style look. Plus we had a bar, this weekly bar that closed outside the Keltner, which was also a bit of a warning shot. Okay, so that's what I'd be looking for here. We're a long way away from getting parabolic on this on the weekly. Okay, on the daily we're a little bit closer. Okay, but it's just more, if that starts getting outside this Keltner channel, it gets down into the 50% zone. If all that starts to come together and we start to see, we'll just get rid of this, obviously that's the weekly, and we start to see some of the market holding its feet, well then maybe we can put it on our watch list and start to formulate some sort of plan. You've got to think, well, okay, well, you have a look at the fundamentals of the company. Do you like it? Is there reason to think that this can go up? I mean, I think that some broker target was up here at $3. That's a long way away. Double your money. That sort of thing's up to you. But just technically, you would just wait for this to start to look like it's going to form a bottom and think, okay, well, what is now the plan? What sort of plan can I put together that would entice me to enter this market with a nice clear risk point where I'm going to get out, and then we let it run. Okay, not there yet, but that, like I said, that's the sort of thing that I'd be looking for. So just to finish up, yeah, we are undergoing this correction. It's now just a question of how much further is this going to run. I haven't looked at the cycles, but find its bottom pretty soon, and then it'll just be a question of what sort of push up are we going to get. Okay, you know, obviously to go higher than this, it's going to have to start trending up. But like I said before, I could be excited that the bottom's in and we're going further, because the danger would be that it does this and then we get another swing down. That would be the danger. That remains to be seen. But I would say, like, to upset the apple cart in terms of the more bearish sort of corrective, that we would have to do more than one swing, with the swings getting bigger, like the upswings getting bigger and the downswings getting smaller, the trend accelerating, as you expect in a 5-wave move beyond the peaks. Okay, so that would be what I'd be looking at, and that's probably over the next few months. But my anticipation remains that sometime soon we're going to see this bottom come in, that we're going to have some sort of trading range. That still remains my base case, but that will have to be proven further down the track. So that's it for this week. Thanks for watching. Let's have a look next week. And just look, just deal with the evidence that's in front of you. Don't fall for the permables stuff. I've seen people with permables and then all of a sudden it's coming off, and so they just don't be an ostrich with this, because it could go lower, may not, but it's not setting up super well right now. So that's it. Good luck. We'll see you next week. Bye for now.